In this presentation, we will take a look at multiple choice questions related to governmental accounting, going through those questions and then practicing test-taking skills with them. First question, proceeds from the general obligation bonds will usually be recorded in either A, the debt service fund, B, liability fund, C, long-term liability fund, D, capital projects fund. Let's go through this again using the process of elimination. Proceeds from the general obligation bonds will usually be recorded in. Now, when we think about general obligation bonds, typically we're issuing bonds, and we want to think about a couple accounts that may be involved with the issuance of bonds. If we're issuing the bonds and we're financing, say, a capital project, then we're going to have the government-wide activities that are going to happen where we issue the bonds. We're going to have the capital projects fund, possibly, if we're having a capital project, is why we issued the bonds, and then possibly a debt service fund. So oftentimes you want to write down the normal government-wide activity on an accrual basis and then think about the fund side of things here. And so I would say, if we issue a bond, typically we're going to say that we have the cash is going up in the government-wide activities. Cash is going up, we're going to say, by like 110. And then we're going to say that we have a bond payable goes on the books, which is like a liability. It's going to be on the books, we're going to say, for 100. And then possibly we have a premium. Oftentimes we're going to have a premium in these cases, and that's going to be the 10. So that would be in the government-wide activities. Then on the fund side of things, we have the capital project fund, and we have the debt service fund. I know this is really ugly with the mouse here, but in the capital project fund, we're going to typically transfer in only the face amount, which will increase cash, and it'll increase like other financing sources. In the debt service fund, we may increase the premium amount, may go to the debt service fund because that's what's going to be used to pay off the interest. So that would be kind of like the fund side of things. So keeping that in mind, let's go through this again. Proceeds from the general obligation bonds will usually be recorded in either A, the debt service fund. Now, the debt service fund may be impacted, but not by the proceeds typically of the bond, but possibly by like the premium portion. So not the whole thing. B would be the liability fund. That's kind of like that doesn't sound like a real fund, liability fund. There's a debt service fund. And then C says the long-term liability fund. And again, that doesn't sound like a familiar thing to me. And then D says the capital project fund. That's where the main amount would go. The proceeds or the principal would typically go to the capital project fund and possibly the premium to the debt service fund. So final answer D, proceeds from the general obligation bonds will usually be recorded in D, capital project fund. Next question. Debt service funds account for either A, payment of interest on general long-term debt, B, payment of principal on general long-term debt, C, payment of principal and interest on all debt, or D, payment of principal and interest on general long-term debt. Let's go through this again using the process of elimination. Debt service funds account for. Now you'll note that, of course, C and D are going to basically counteract A and B. So C says payments of principal and interest on all debt, so that would include everything. And then D says payment of interest and principal on general long-term debt. So the interest and principal. So D would be including both of them, and I guess C would be even more encompassing, including all of them. So A says, does the debt service fund account for payment of interest on general long-term debt? B, or is it just going to be paying off the principal on long-term debt? Or does it take care of all debt? So I would think that if I was given this and I wasn't too sure, I would think that it wouldn't be A or B. It's going to be one of the other two, I would think, because we're going to pay out of the debt service fund the payments of both interest and principal. And then between C and D, the question is, do we account for all debt of all the government entities, or do we account for payments of principal and interest of general long-term debt? Now, of the two, it's going to be D, because we're not going to do all debt, because if we did all debt, if we have some debt, for example, possibly short-term debt or debt that's going to be in a proprietary fund. Proprietary funds can basically deal with their own debt, or we might have situations where we're using the general fund. So it's not going to be all debt. It's not going to be all debt. So final answer, D. Debt service fund account for D, payment of principal and interest on general long-term debt. Next question. Not on balance sheet of debt service fund. So which is not on the balance sheet? A, cash. B, investments. C, fund balance. D, equipment. Let's go through this again using the process of elimination. Not on balance sheet of the debt service fund. So whenever you think about these items, you want to think, where are we? Are we on the government-wide activity or funds? And if we're into the funds, as we are here, are we talking about normal accrual accounting or modified accrual accounting? So clearly we are in a fund. We're in the largest grouping of funds, governmental funds. Those groupings are all on a modified accrual basis. Main thing to note about a modified accrual basis is that it doesn't have long-term assets, long-term liabilities. Typically, those are going to be short-term type of items on the balance sheet, and that's what we're talking about here. So cash, you would think it would still have cash. Cash is short-term. Investments, now investments you might think, well, that sounds like a long-term thing maybe. I don't know. I'll keep that for now. C says fund balance. Now fund balance, we may not totally know that, but it's got the term fund in it, so maybe it's going to be a fund item. And then D says equipment. Now, equipment is certainly going to be something that is long-term. So it's long-term, so therefore the equipment you would think wouldn't be on the debt service fund because it's going to be a long-term asset. So I think of the answers, D looks like the best answer here. So we're going to have cash. We could have investments because we might put the cash away into an investment, but it would be a short-term investment to get a short-term return because the debt service fund isn't handling long-term investments. The fund balance is kind of like the retained earnings part of the balance sheet. So there's going to be a fund balance that's going to be similar to the equity section in a for-profit organization, but there won't be any equipment. So final answer, not on the balance sheet of the debt service fund, D, equipment.